Hello investors, welcome back to the channel. Today we're going to be going over my M1 Finance portfolio. So this is my monthly review of my portfolio and how we're doing. This is my dividend investing portfolio, obviously, that I automatically drip back all the money that I receive from dividends and reinvest it all to use the component of compounding interest to make more money and keep investing more into the portfolio. As you guys can see, the portfolio value is at $8,793.31. Our gains are at $672.55 on the market gains. And then in dividends in the past 10 months, I've received about $115.65 for a total of $788.20. And then return is at about 15%, 15.05%. Now, before we get into the portfolio, guys, go ahead, make sure you smash that like button for me. Let's try to get over 50 likes on this video. Also, that will enter you for the giveaway. So make sure you subscribe to the channel as well to be eligible for the giveaway. Leave a comment below what is your favorite dividend and how much you received in dividends this month. And now we'll get over and start out the portfolio. So let's get started. So as you guys all know, I have every sector. I have my bonds and ETFs, my real estate, consumer, telecommunication, health, utilities, defense, finance, and tech sectors. So I have certain amounts, these are the values of all the sectors, and then our total gains of every sector as well. And then right here, I have pretty much a spreadsheet that tells me all of my stock holdings that I have in the portfolio, and obviously my dividend payouts for the month. So it tells me every month how much, what stock is going to be paying me and what is the percentage of the dividend that I'm receiving. So for the first example, we have ticker symbol AT&T, and then we have ABBV. ABBV has a dividend of 5.3%, and it's going to pay me in February, May, August, and November. So I can keep track of every dividend that I have, when it's going to pay me out, if it's a monthly dividend or a quarterly dividend, and how much I'm going to be receiving of the percentages. So let's get into the portfolio. The first pie, or first sector, I guess you could say, is going to be my bonds and ETFs. Obviously, one thing to mention real quick, I have been adding more money to the portfolio as this goes. So as you can see, it's worth less, and then I kept adding. So, the gains, the $700 gain in the past 10 months, it's not from that total 8,700 investment. It was a lot less in the beginning, and I've been adding more and more. So don't look at it as in I earned 15% profit, for the past 10 months, because I've been adding more money to the portfolio. But anyways, let's get into the portfolio. We have our bonds and ETFs. Our total value for this one is $1,918.73. Our gains are about $59, 6.5% return. In the portfolio, we have SPHD. SPHD gave us a return of about $14 or 3.8%. We have Vanguard REIT ETF at a return of about $32.70 or about 10.7%. We have LQD, which is a bond ETF, and we're up about $22 or 10.25%. And then we have this, it's going to be SMH. This is mainly like tech companies ETF. This was one of my newest holdings in the portfolio, actually. The value I have not as much as the other ones, but we're down about $9 on this one, or 3.7%. But that is obviously because I just got into this one. So over long term, it's going to probably be in the positive as I'm going to continue adding more and more, as the price averages down. Next, after the bonds and ETFs, we have our real estate, our REITs. This one, the value is $1,339.84. Total gains about $134, 13.2% total. In this one, we have stocks like Store Capital, amazing company, up about $81 or 18.2% on this one. We have Realty Income, up about $41 on that one, which comes out to be about 13.2%. And then we have Welltower, which is up about $11, which is about 4.3%. So out of the three, Welltower is my weakest point, which is okay. That's why I invested a lot more in Store Capital and Realty Income, because I knew they would do better than Welltower. As you can see, they're up about 13 to 18%, while this one's only 4%. But that is something that I already knew that was going to happen. So that's why, I have more in certain stocks than others. After the real estate, we have our consumers. In the consumers, we have a value of about $1,155.31. If we take a look here, it's a gain of about $141.13 or 15.6%. The stocks that are going to be in here is going to be Coca-Cola. One of my favorite companies to hold. I'm up about $58 on this position, which is about almost 20%. We have Walmart, which we're up about $29 or about 11% on that position. We have Pepsi, which is up about $24 or about 13% almost. And then we have Amazon. Amazon has done very, very well in the past few weeks/months. We're up about $28 or about almost 20% on Amazon. And that's actually an amazing thing about M1 Finance, guys, because you can buy fractional shares. So with Amazon, obviously the stock's worth like almost 2,100 per share right now. Well, if you don't want to buy a full share of Amazon, you can, buy a fraction of it. And that's the great thing about M1 Finance. I own $173 worth of Amazon stock. So if you guys are interested in signing up for Amazon or signing up for M1 Finance to trade stocks, I'm going to leave a link in the description. If you sign up for M1 Finance, you receive $10 once you fund $100 to the portfolio, and I receive $10 as well. So that's going to be a link in the description for that if you guys are interested. After our consumers, I believe we have our telecommunication. In this pie, we have $1,073 or $1,067 value, and the gain is at about $81.46 or about 10.8% gain. The stocks in this pie is going to be Verizon. Verizon is up about $23 or 8%. Comcast, we have $23.61 gain or 7.3%. And then we have AT&T at a $34 gain, which is about 24.5%. All of these three amazing stocks. 5G is a huge thing that's coming out. Everybody's competing to be the best, so that is the reason why I have these ones in the portfolio, because I believe they're going to do very well long term. And obviously I'm going to keep continuing to add more, buying more shares of these into the portfolio, fractions of shares obviously to grow it more and more. After that, we have our health sector. Now in the health sector, we have some new stocks this month as well. This is going to be valued at $972.89 or about $25.68 gain or 6.2%. So new stocks in this portfolio that you guys have not seen yet is going to be ABBV. They're doing very well. They just had earnings. They're trading at all-time highs currently, actually. I'm already at a return of about $16 or 6.6%. We have Pfizer. I've had Pfizer and I keep averaging down because the stock is doing horrible currently. So every time it goes down more, I'm going to continue to add more. We're down about $16 or 8.5%. So obviously that's something I'm going to continue to add on to. I always add to stocks that I'm down on and stocks that I believe that have a bright future ahead. We have Johnson & Johnson also doing very well recently, up about $25 in that position or 13.7%. And then we have another new one, which is going to be CVS. You guys all know CVS. We're only up about 30 cents on that position or about 0.20%. So not much, but the health sector is something I'm really focusing on recently, and hope to continue to add to that because that is my weakest point in the portfolio almost, as well as the defense sector. But next we have utilities, and the utilities value is at about $906.28. At a gain of about $98.85 or about 17.3%. In this pie, we have Southern Company, ticker symbol SO. We're up about $63.08 on that position or about 27.7%. That's an amazing amount to be up on this position. Next up, we have Dominion Energy, ticker symbol D. We're up about $25.27 or 13.6%. We have Duke Energy. We're up almost $20, which comes out to be about 14%. And then we have a new stock in the portfolio. Once again, it's going to be Chevron Corporation, ticker symbol CVX. This one, we're down about $9 or 6%. This one, I added to the portfolio, even though it has been going down recently and, in the months/years, but it's okay. Long term, I believe this could do very, very well. So we'll see what happens with that one. Something that I'm going to continue to add on as the price keeps dropping lower. After that, we have our defense sector. So this is also a sector that I've recently added in 2020. It's current valued at $536.35 or 16.3% at a gain of about 3%. Once again, I add, Lockheed Martin, I added or bought more of than I did the other two because I believe in that company more than I do the other two on the bottom. And Lockheed Martin is up about $17 or about 7%. RTN, we're up about $3 or about 2.7%. And then NOC, we're about -$5, almost $4.50, or 3.6%. Obviously, as the prices continue, like I said, I'm going to continue adding, because all the dividends that I receive in this portfolio, I go ahead and reinvest back into the portfolio with drip. As you guys can see right here, auto invest is off, but I do it, myself. I continue to reinvest all my dividends back into the portfolio as I receive them. After that, we have our finance sector. In our finance sector, it's valued at about $458.10, at a gain of about $90.96, or about 27.3%. The two stocks that I have in this sector is going to be JP Morgan Chase. We're up about $87 on that position, which comes out to be about 27%. And we have Bank of America. Bank of America is one that I was going to add to this year, but it's kind of been going up, so I haven't added too much to the portfolio on that one, but I'm planning on continuing to add more. It's up about $4, or about 23.7%. I did buy more of it, and I'm going to continuously add more and more to that piece of pie, actually. So, and then last but not least, we have the tech sector, which is one of my best sectors. Very, very nice, as you guys know. Valued at about $438, or about $140 gains, and the return is 46.9%. Probably one of my best stocks in this portfolio. As you all know, I have Microsoft, MSFT. I'm up about $140, which comes out to be, like we said, almost 47%. And, this is probably my best return on this portfolio. I have Microsoft on both portfolios, my M1 Finance and my Robinhood portfolio. It's great. I think I have in total about 15 shares, but Microsoft has very, very bright future. This one's probably going to keep on continuously growing into the years, receiving a decent dividend from it as well. A dividend that I don't mind continuously receiving. I'm planning on adding more money to this portfolio every month, so I'm going to continue investing more and more into the portfolios, which means I'm going to be receiving more dividends. I believe the portfolio is valued at about close to 3% dividend return yearly. So currently I'm receiving about $270 in dividends, but this value is going to continuously, keep going up and up as I continue to add more every month, as I'm working more and receiving more money and saving more, which means I can reinvest more into the, portfolio. So that is something that I love to do, is that compounding interest from dividends as well, and just reinvesting, having everything organized, knowing every month that I'm receiving the dividends, if it's a quarterly dividend, like I said, or a monthly dividend, and knowing the exact percentages, so I know which stock I should add on, because I want to have a return of 3% or higher. So I want to add more to the positions that are above 3%, so it can bring up my average value of the percentages. So I want to buy more of, like, all the VNQ, LQD, all the bonds and ETFs, a lot of the REITs, stuff like that. A lot of the health sector, like ABBV, ticker symbol T and D. Those are ones I want to add to the portfolio more, so I can get paid out more in dividends and, not lower my dividend value. So yeah, guys, if you guys enjoyed this video, don't forget to subscribe to the channel, smash that like button for me, leave a comment below. How has your portfolio been doing? What is your favorite dividend stock to invest in? And yeah, I hope to see you guys in the next video, and I'll see you next time. Goodbye.